this is something you absolutely going to need, and I am not going to give you this exact template, although you can screenshot it, but what would be actually the best way if you would do it by yourself. I am also not going to be showing you this for a different trading approaches I just covered. I will just show you this for this one, which is the intra-week strategy that I'm running, but you will have to adjust it yourself. Once you do that, you can send it to me. I will take a look at it. I will be happy to give you any sort of input. But having this kind of a mind map, which you can refer all the time, is really helpful. So let's take a look at each steps, and this is basically your step-by-step executions. Although we are not trading in a systematic way, you want to be able to kind of put the systematic approach to as much things you can, because you will be able to eliminate a lot of kind of a decision making and mistakes on the way. So you are going to start from here and basically go down to this part. First things first, for my intra-week trading system, I am looking at the biases. Do I have a daily or weekly bias? These are, the clusters, the HV. This means the high volume edge, which is basically the level of daily support and resistance. I just call them like this. The failed swing or the daily bias candles. Of course, it can be a weekly bias candle as well. If I have any of these things checked, then I am looking at the next key daily or weekly level. I showed you what this means. No need to go through that again. If answer to this is no, if market is trading to kind of nowhere, I am trading from one H4 level to next using 30-minute chart. And this is kind of a important disclaimer that trades has to be executed in line with H4 flow. This means during entries on a 30-minute chart, I'm looking at H4 structure for the cluster, QM, or failed swing levels. When in trade, I'm looking at H4 failed swings or other levels for early exits. When trades are going my way, but there is some nasty, H4 rejection from a level I wasn't expecting, I need to question if I want to be in that trade any longer. There are two ways you are going to be entering the market, with the limit order or the market order. Let's go this way first. Limit order is for clusters and QM patterns, and I am required to have two confluence factors for each of these trades. The confluence factors for QM and FTR or cluster setups are naked point of control, prior value area, prior yesterday or prior week high and low were taken entering into basically confirmed failed swing. So what this means is that you have a weekly low here, market is going to revisit it and do something like this. Basically, we made this kind of a failed swing here into the QM. I'm taking a trade to the upside. So this is the confirm, this thing, what I mean by that. Triple tap bottom or top, this is self-explanatory. Single prints, marked from the market profile as kind of a line for the confluence. Absorption at the high of the low. This once again would be the absorption inside this. For the cluster trade, we would move and there would be large amount of selling in the cluster itself, so you're testing a level with a perfect structure where a large selling was done before the move higher. And trading into compression, which is the obvious thing, we talked about this many times, is that market will basically do something like this. You are going short and below you have this level of compression. Okay, so these are my confluence factors. I need two of them if I have a higher time frame bias, so if I'm executing trade at weekly or daily level, or I have weekly or daily candle to play with me. I am only looking at one confluence factor. These factors are good because they will, basically constantly look at these things, because you might miss a level or something like that. So it's good to have these. Okay, so the entry. I'm entering at the limit order, last, up down bar before expansion, high volume at the top or bottom bar. This is, this thing which I mentioned when it comes to these clusters is obviously, this is your cluster. You have a high volume in this last down bar before the move up. So this is your last down bar. There was a high relative volume, ideal selling happening inside. Market went up from there. So this is where you're going to place your limit order. For the QM is the last support and resistance, that happened. Let me just do it like this. Obviously this is the QM. This is your last level of support. You are placing your bid there. Okay, the opposite is also, of course, true as well. Last level of resistance, you are placing your trade there. Okay. Target must be 2R from entry. If no trade. This is something that I mentioned in a risk management video. I am only taking trades which are 2R and more. It is what it is. You wanna do as many things as possible to have these probabilities on your side, and taking trades like these is definitely one of those things. Of course, sometimes when you have a extremely clean setup on a extremely kind of a, you have a daily bias, everything is just too clean, it's 1.5 hour only to the next level where market can turn against you. Yeah, why not take a trade? But overall, 90% of cases I am only taking trades with 2R. Target the next H4 first trouble area, the FTA first trouble area, where trade can turn against me. This is H4 SR, naked point of control, daily, weekly level. Usually it's going to be kind of next H4. So for example, you have a H4 failed swing here. You're going to enter in sort of a 30-minute QM, for example, or something, and somewhere here above the price is the H4 cluster, or this is the next H4 high, swing high. You will be targeting either of these. So this is what I mean by that. If daily, weekly bias, then I'm taking trades into daily and weekly levels. The trade management, I'm trailing stop based on a 30-minute structure. This is something that I also mentioned. How am I trailing the stops? When obviously I'm watching the evolving R, but I'm not really. So let me do it again with this awesome colorful tool. I'm not going to trail stops like this. This is too kind of a obvious thing for your stop to be trailed, because you are obviously exposed to any sort of a swing that will take you out. I want to see basically something like this to happen on the way up. You took out the low, my stop goes here. We're gonna go high, we make these little bit of highs, and then once again something like this will happen. And it can be single 30-minute swing, for example. That's okay for me, but I want to see any kind of a probe of a small intra kind of 30-minute support for me to trail the stop. Not doing this, you will very often get just taken out, but if something like this happens, you are good to trail your stop. The only exception to that is when for example, I entered the trade here, the market then did something like this, so I trailed my stop, and then we started just this kind of a compression, and my target is here. So when obviously is going to do something like this, I'm gonna move my stop loss again, but then we are start to kind of do this into the level. At this point I am moving my stop more aggressively, because I am not willing to risk this last 0.1 5R for example to the target to give back. I don't know, if my stop is here, then you are, once again, if market will turn in front of you, pull back, take you out, you will give back, let's say 1.5R, and you were only able to catch half R if market would finish the move higher. So in this case I'm way more aggressive. This is, sometimes it will cost you the trade. This happened to me in gold. I can actually quickly show you this. If you're gonna take a look at the gold, the trade that I took, I was, buying this cluster. I mentioned this in a videos as well. I posted this on Twitter. But what happened? Market did this thing, and I have seen this double bottom, yesterday, where market was trading here, and I was like, here was my target basically, by the way. And I was like, in this consolidation, I was like, okay, you know what? I am up. My stop loss was basically below this low at the time, but I was like, yeah, I'm not willing to risk any sort of pullback at this point, so I just closed the trade. As you can see, market pulled back but didn't run this double bottom and just continued higher. So I lost a little bit of potential profits, but it was just something that made sense to me to do basically. So where were we? Back here. Okay, so this is how I am managing my trades, and there is a note for that. Being too aggressive will result in trailing stop hit. Use 30-minute FTR and look for 30-minute fail swing to trail stop. This is the FTRs are the clusters once again. Always assume a small stop run and try to avoid it. Exactly what I talked about. So we covered the limit orders. The market order is the failed swing. Once again, 2 factors of confluence. These confluence factors are going to be a footprint, absorption inside a wick, fading the prior day and week high and low, key daily weekly level, key SR level on there is a little typo. This should be only on H4. Okay. H4 key SR level basically, the fail swing on a H4 if you have confluence. High relative volume candle, double top, double bottom fade. This was something that I mentioned, the kind of those technical patterns, double tops, double bottoms, with what people often use as their areas where they place their stop losses basically. So when market is going to come back, make a failed swing there, I'm happy to short that. Okay, and poor high and poor low fades basically, fading this will be the same thing as yesterday, prior day and prior day high and low, but you are fading this poor structure on the day. So this is a nice kind of a confluence for that. If there is a daily or weekly bias, only one pattern of confluence is required. It's the same thing as this basically. Let me just change this from that rainbow color. Okay, so this thing. Okay, so the entry is the market order after candle close. If market rallied too much, refer to limit order entry patterns. Okay, so once again, you have a level with a failed swing. Market will trade below it, but then the candle itself will close somewhere here, and this is just a kind of a huge wick, for example, and you don't really know what to do. In those cases, I am waiting for market to actually push a little bit higher, or ideally make some sort of a pause, then breaks the structure, and then I will trade this as a cluster. I would kind of give up on the failed swing trade, because the risk to reward has to be there once again. So if this candle is too huge and my risk to reward is not there, then I'm just going to bail on the trade completely and wait for a new structure to form, which would be kind of a continuation cluster in most cases. The next H4 FTA, this is the same thing basically. I'm taking from one H4 level trade from one H4 level to another. I am trailing my stop completely the same way as I do with the other trades, So we covered that. Risk per trade, I'm risking a 1% on any kind of trade which doesn't have a higher time frame bias. Okay, so the trade that I showed you, for example, in euro. When we were talking about the intra-week strategy, you know, that was a trade where I didn't have any sort of higher time frame bias. We were not coming from the daily or weekly level, so this is a fixed 1% risk, and 2% when I have the higher time frame bias. So if there is a weekly or daily level and so on. Risk per day. Okay, so I am risking 2% per market. Okay, I have basically 2 shots on a trade. Let's say that once again, you will have a kind of a swing point where you want to be fading it. You will get your confluences. You will fade it here. Market will immediately stop you out. Then will pull back again, so you are at one loss, but then you see this kind of a 3 drive to the upside. You will take this trade as a QM here, and the market will continue to go higher. And if you think this is something that is not likely to happen, it will happen. So after the 2 losses, the 2 shots, what I like to call it, I'm just done. I'm done with the market for the day. Whatever it does, it's not in line with the views, with my views of the market and how I would like to do things. So, you know, taking 2 losses in a day in the same market is more than enough for me, and I'm just done with that. So I will just wait until the next day, or overall until the next level is reached, or until the next structure is formed. 3% risk for a whole day. Okay, so this is kind of a conservative things, because obviously you shouldn't be limiting yourself. You know, you should basically take every single trade in the ideal scenario. You should be taking every single trade that fits your trading criteria. But in reality, you know, when money are involved and everything else, if I take 3 losses on a day, which I'm going to be honest is not happening in this kind of trading approach, because I'm not usually taking three trades a day. But if you will be day trading, this, you know, taking three trades is something that can happen. So if I take 3 trades and all of them are not going to work out, I will just walk away. You know, sometimes it's just good to just stand up and just leave, and, you know, do anything else than watching the market, because then, you know, you might see something else. You will risk more, you know, you will obviously try to revenge trade it a little bit, and you will lose even more money. So 3 trades a day, I'm done. You know, I'm walking away. I'm going to do something else. Risk per account and strategy. There's a 10% risk for a strategy. Okay, so if for example, I am taking these failed swings, which have this order flow confluence with absorption to the top. If these things will experience kind of a 10 losses in a row, or just overall I will take, you know, 15 trades, these failed swing will be in 10 of them, and all of them will result in losses, I need to do something with that. You know, you shouldn't be doing things that are not working. You know, if something feels off, and this is obviously how you will be finding it out through your trading journal, but if something is not working, there is no reason to just, you know, take these things over and over again. You know, first of all, you need to look at these things if there is not a mistake from your side. You know, if for example there is a swing point and market is trading above it, and you will see this buying absorption right here, and you will just fade the candle at the absolute top, and market will continue. You know, this is not in any shape or form kind of a confirmed failed swing, because there can be just buying that will continue to drive prices lower, and, you know, people will be then, yeah, I tried to trade this as a failed swing, but there is nothing failing in this case. So if you take 10 trades and you will realize that you are just, you know, fading any sort of breakout, then there is not, you know, nothing wrong with the strategy. It's wrong with you are the problem. But if this thing indeed moves lower, you will take a trade and you will get stopped out 10 times in a row, then that's not great. So you need to be then finding out what is going on, and if something like that is going to ever happen to you, it never happened to me, so I hope it won't happen to you. But if it will happen to me, to you, just make sure to, you can reach out, and I will be happy to take at your journal and try to help you with this. 25% risk per account. If whole account gets 25% drawdown, I will reevaluate what I've been doing wrong. The 25% drawdown, if you are risking 1% per trade, it's 25 losses in a row. This shouldn't be happening. So if this will ever happen to you, there is something you must be doing wrong. So once again, but if this would ever happen, there is no reason to continue, because if you are really risking even 2% per trade, it shouldn't be happening. So why continue? You should just reevaluate things. Drawdown. When in drawdown, wait if trade forms a new structure to the opposite direction. If that happens, wait for confirmation and close the trade. This is something that I mentioned. If you are in a trade which went basically nowhere, and you basically start seeing reasons to go to the opposite trade, just better to get out. After this happened, don't enter the opposite direction immediately. Journal what happened and wait for a new setup. Sometimes you can, obviously you are long, you see a short opportunity, you will scratch the long, go short. Sometimes it can work out, sometimes the market will continue actually going long, you completely screwed up the whole trade and you are just pissed on yourself. So, once you start to kind of flip-flopping in positions, it's better to walk away. After stop loss, after getting stopped, new valid setup has to appear with valid criteria. After you will get stopped out, you should never revenge trade. You should go back right here. If your stop gets hit, you are not immediately looking for a next trade, but you are taking this whole kind of a road back to here. Okay, this is extremely important because people are able to do insane things once they are stopped out. So you never want this to happen. Taking stop losses is completely fine. There will be plenty of them, but you need to, once again, trust the whole process basically. Trading hours, 8 a.m, proper morning analysis, mark out opportunities and set up alerts. Market is monitored around H4 closes, and at 9 p.m. in the evening, scan the market for the next day. You need to kind of adjust that. If you are trading crypto, you should be doing this around the daily close, for example, but this is kind of a general approach. The mornings and the evenings are the crucial, and the next video will be about this preparation, but this is where the most work is done. You don't want to be especially with this kind of more of a swing approach. You have a lot of times to prepare for things, so taking kind of a hectic trades is not really something you want to be doing. And the last thing is the market mapping, the weekly analysis with weekly levels and bias bars every Sunday evening. Crypto is closing weekly candles on Sunday. The legacy markets are closed overall, so Sunday makes a perfect day for the preparation for the next day. The daily analysis with the daily levels and bias bars every evening during the week. Ideally, around the close. If you are not willing to stay late for crypto candle closes, if you live in Europe like me, you're just going to do it in the morning. Obviously, this is not like something you should strictly follow. This is just my kind of a plan I wanted to share with you, because obviously it helped me a lot. So, and I'm sure it will help you as well. Intraday analysis every morning, midday and evening. Yeah, it's just the H4 closes. If you will be day trading, adjust this to the day trading. It's you can just change the time frames basically, but I really encourage you to make your own from the scratch. You can use this one as inspiration, that's completely fine, but really take the time of doing things. It's never great thing when you just do the exact same thing someone else did, because you want to be doing all this work by yourself basically. Okay,